The first set of questions is focused on the banks. And I'll go ahead and start. Business owners have noticed that it is difficult to get a loan from a bank over the past year. Banks require more collateral, higher loan-to-value ratios, tighter terms and conditions. We have termed this the new normal because our perception is that this will last for a while. So this is a two-part question. Do you think the banking environment will ever be like it was a few years ago? And number two, how long do you think it will take before the banks lessen the terms and conditions to improve business loans, freeing up capital for small businesses?
Thank you, Dallas, and I appreciate you inviting me on the panel today, and I thank everybody in the audience. I think your topic is dead on, so very timely. Do I think that the banking environment will be like it was a few years ago? No. I don't know that it will ever get back to the way it was a few years ago. Fortunately, I don't think it will get back to the way it was in the 70s either, but it is definitely back to a common sense, back to basics type of lending. You know, during the go-go days, if you will, the many banks, companies, individuals, we kind of abandoned our principles, and those principles, you know, it was the foundation there was common sense lending. And that common sense lending means that loans in today's environment are going to take a combination of equity. It's going to take cash flow, liquidity, both from the business and the individuals. I mentioned the individual, solid personal guarantees, experience in the industry that you're looking to lend in. As well, banking relationships now are more important than they ever have been. The deal days are gone. Just to come in and get one loan without having a deposit and other banking relationships, it's going to be difficult. The second part of the question is, how long do I think it will take for banks to lessen the terms? I'll just say that depending on the loan request that you currently have, there is some flexibility out there in the market. You know, if you're a developer, unfortunately, you know, it is very difficult to get a loan if you're developing any type of investment property or a speculative residential home. However, if you own a professional practice and you're looking at purchasing the building that you've been renting for a number of years, you know, legal, medical, what have you, you might be surprised at how competitive the banks are being on those types of loans. So it's not all doom and gloom by any means. The banks are lending, but certain types of industries are, you know, a little more flexible than others. So
I think Mark did a very good job hitting the majority of the points as it relates to the banking environment, and if and when we'll ever see it again the way it was several years ago. I hope that it doesn't happen in my career, but it will. You know, the market ebbs and flows. It will come back because of competition, shareholders demanding growth and profits. Things will loosen back up. I just hope that it won't be quite to the extent that it loosened up over the last few years. You know, we saw unprecedented growth, appreciation in a lot of different areas, and you know, I think everybody deep down knew that it couldn't continue to keep going the way it was going. But you know, again, we just kept on rolling, and unfortunately, now we're having to pay the consequences. You know, when the faucet did finally shut down, I think that the access to credit was just too easy. You know, the credit card companies were loading people up with big lines of credit. Mortgages were very easy to come by, and so we abandoned the basic principles of banking. But again, you know, I think that human nature, entrepreneurship, and basically market pressure to perform will allow, you know, A&D loans will come back. Construction will come back. All of these things will come back in time. It's just that there's a lot of available inventory out there. And until we're able to get the individuals to move from up north, get the retirees coming in, continue to grow our job base, it's just going to take a while to digest what we currently have. So time has a way of healing things, and we'll get through it. And you know, and the banks will be back going wide open again. As far as the second portion of that question, yeah, the bank terms have really not changed a great deal as far as new requests, refinances, things of that nature. You know, our amortizations have not been moved one way or another drastically. You know, we tend to shy away from the 30-year amortizations on commercial buildings. But there's not been a whole lot of change. The down payment is definitely something that has come back. And if you look at all of, you can look at Mark's policy, you can look at my policy, you can look at any bank's policy manual, and you know, there typically needs to be a little bit of equity put in the deal. So as far as, and I think to reiterate what Mark said, you know, the banks are still competing for the viable business, the small businesses. We're out there trying to still help builders and the developers that we currently have in our portfolio. The problem is if nothing's moving, it can't replace it. And that's, you know, we have certain percentages that the FDIC beats us up pretty hard on, and one is the commercial real estate percentage to your capital. And if if your real estate's not moving off the books, you can't put any more back on. And so we're getting tugged in a lot of different directions, and I know it makes it hard for folks in this marketplace because we are a market driven by real estate. But you know, I do think that it will get better in time.